All right, guys, let's get into it. So today we're going to go ahead and go over my approach. So this is really my approach on it. It's not the only way. By far, there's so many ways. There's so many complex strategies here. But I'm going to go over my approach on directional option trading. So just want to be keep it very, very simple here. So let's go ahead and do that. So simply speaking, if I think that the stock is going to go up, I'm going to buy calls. If I think that the stock is going to go down, I'm going to buy puts. One mistake that I made when I first started trading options was selling puts. I assumed for some reason that you would be selling puts, but that's not the case. You can both sell and buy puts. What I'm going to be doing is simply buying calls and buying puts. So if I think the stock is going down, I'm going to be buying puts. So if I think stock's going down, I'm buying puts. If I think the stock is going up, then I'm going to buy calls. Okay. So hopefully that makes sense. I'm not going to be selling calls. I'm not going to be selling puts. I'm buying puts and buying calls. So I want to make that very clear. So one major benefit is that I can trade either direction in the market, whether it be bullish or bearish. So despite if we have a bullish market, we can find opportunity. And if we have a bearish market, we can also find opportunity. So I think that's one of the major benefits that attracts me to it. So options, simply keynotes here. Again, we're going to jump over to the charts here in a minute. We got a lot to go over, but keynotes, strictly trading from the stock chart itself. So I'm not trading off of different things. I'm not trading off of level 2. I'm not trading off of different things. I'm trading off of the stock chart itself. So for an example we'll go over here in a moment is going to be Tesla. But on Tesla, I'm simply marking key levels and trading puts and calls off of those levels. And I will be using confirmation strategy for it. So scalping in and out within minutes or less. I do not want to be in these trades any longer than that. I'm not looking to hold these overnight. And again, this is just my approach on this. So very, very simple approach here. Directional calls, directional puts. So in my approach here, I'll be scalping in and out within minutes. I don't want to be in the trade much longer than that. So I'm not as concerned with how much green that I'm getting out of it. I'm not concerned with how much profit exactly I'm getting out of it. What I'm more concerned with, and that might sound crazy to some, but I'm scalping key levels. So if we break a key level to the high side, then I'm going to be scalping calls. And if we break a key level to the low side or bottom or come down, I'll be scalping buying puts. So again, and I will be using confirmation strategy. So again, I'm using key levels. So this really requires support and resistance before I start taking these trades. As we all know, when it comes to low floats, which is my bread and butter, what's really made me the bulk of my profits over the years is going to be finding those key levels and being able to depict where the support and where the resistance is. So that's exactly what we'll be doing with this. I'm not going to be trading options on low float names. I'm only trading them on large cap names and large float names. So using confirmation strategy, which does require support and resistance, and I will be cutting losers fast. Okay, so I'm not always going to be right. Of course, there is no strategy that works 100% of the time. So I will be cutting losers fast. I do not want to stay in the trade. I'm not going to, I won't be averaging down. I'll get back in the trade at that key level if it breaks it again. But if I'm wrong, I'm wrong. I'm going to cut that loser fast. So cutting losers fast using confirmation strategy. I'm going to be buying at the money or just out of the money. So just one out of the money. But that's my approach on it. Again, we have a few traders in here that have a different approach. This may change going forward, but right now I'm buying at the money and just out of the money, which I'll explain exactly what that means here in a moment. It sounds confusing. Trust me, it's not. But of course, it's going to seem confusing at first. I'll break it down in a simple way. But at the money is what I prefer. So if I have a key level, and again, we'll go over this on the chart, but if I have a key level, say on any stock, for instance, at $200, when I look at the options chain, if I see a at the money at $200 strike or at that 200 strike, that is more desirable to me than just out of the money if we're just out of the money. But I am scalping quick moves, so I want to get in fast and I want to get out fast. And so for that reason, I'll be buying out of the money whenever I can't get in the money. Or excuse me, at the money. So at the money is what I'll be buying. Out of the money is what I'll be leaning on next if I don't get at the money. So for me, I won't be buying in the money options often. Sticking to liquid names with high option volume. So I'll be doing this every day. I'm going to be cycling through probably the same number of names. I'm not going to be really veering off of this path. The reason for that is I want to make sure that these stocks are liquid and I'm able to get in and out with ease. I don't want to have wide spreads. Options have spreads just like stocks do. So we don't want to have that wide spread. If a stock has low volume, it tends to have wide spreads, and I tend to take a heftier loss if it goes against me. So I'm trying to stay away from those names, and I'm going to be focused more so on liquid names like Tesla, SPY, Apple, Nvidia. These are just a few examples. I am working on option scanners that can help as well depict where that option volume is, but these are going to be some of the names that I'm going to be cycling through fairly often, and you guys will see that. So that's it for this little thing here. So let me get this out of the way. Let's go ahead and work on the chart. So let's pull up the chart first to, again, make it very simple. So we'll pull up the options chain. I'm going to pull up the option chain here soon to go over the option chain and exactly how I view that. I think personally the option chain is probably the most confusing part to trading options. But we'll go over that in a moment. So Tesla here. I have Tesla on a 15-minute chart. Okay, so this is a 15-minute chart. As you can see, I don't have any levels that are predetermined right now, and that's because I just have them turned off. But we all know that we go ahead and find those predetermined levels, so I'll go ahead and put those on, and that's our predetermined levels. So these are the levels that I added into our group. These are the key levels that I have found on Tesla. These are the major levels. Now, of course, there is levels in between, which I'm soon finding out myself and kind of scalping those levels as well. But these levels here are basically telling me the major direction of the move. So I'm using these major key levels that you guys know. If you've been with me for a while, I use monthly and weekly candles to get these levels here on large cap. So low flow, I use weekly and daily. On large cap, I'm using monthly and weekly candles. Now, after I mark those weekly and monthly candles, we do have levels in between. What I've been finding, the issue for myself is if I pull up this stock chart here and I see Tesla's right here, it's not near a resistance and it's not near support. So it's in the middle of the road. So I've been finding it hard to trade something like that. So I've been finding levels in between that I'm still back testing and experimenting with, but we'll get into that later. But simply put, these are our key levels. So these are the key levels I'm trading off of. So this candle over here, as we can see, once we broke down that key level, this is my indicator to then possibly buy puts, depending on the conditions leading into it, and also depending on the setup. So I would prefer this to be a 15-minute candle break, but again, back testing. This is a 15-minute chart, so I'm back testing things here. But my approach here is I'm looking for this candle to close below my level to then buy puts to go down. So I'm basically looking for it to go down. Now, yes, it went down all day. I'm not looking for the bulk of this move. This is the move I'm looking for, this candle here. So once this candle closed below this level, I look at this level as basically my stop or stop loss. We start to come over, I get concerned. So same idea as low floats, exactly same idea. So confirmation. If we close over this level, I look to go long, which is buying calls. And if we close below this level, I look to go short, which is buying puts. So again, not selling here, I'm buying calls and buying puts. Very important for everyone to know. But this here, we closed below and we closed there at 277. We then opened at this candle here, 277, and dropped to 275. This is the scalp that I'm looking to make here. Okay, so I'm not concerned with how it worked out later on in the day. Of course, if I held a lottery, then of course I'd maybe be concerned with that. But what I'm doing here is looking to simply scalp this move. So Tesla, it's a directional put here. It failed a key level, closed below, signaling that this level is now a resistance. So it gives me a good indication of if we start to come back over here, then I get worried. Now, again, this setup is not the ideal setup for me because this candle here closed so far from this level that if we got in here and it rebounded, that would be a decent loss just from here. So 277 back to 282, that would be a few dollar loss on that trade. It's not something I'm willing to take. Now, the better setup for me would be maybe it closed up here, or it closed and retraced and tested this level, showed weakness and continued down. Then maybe I'd take the trade from there. But again, back testing different time frames. Maybe if we went to a 5-minute time frame and took a look at that, again, it's still, in my opinion, too far away. But same thing. Maybe you're using a 5-minute time frame, and I'm back testing these time frames when I'm trading. I have right now the 5-minute, 15-minute, 30-minute, and the daily up when I'm trading these. But right now, Tesla, TSLA, when it closed below this level, it then gave the confirmation that it was no longer holding this level as support. It was failing this key level that I had predetermined on my chart. So 282 was a predetermined level. Again, we closed here, so it was a little far apart, a $2 move back up. I think that's a little more than I want to bear on a option. So in options speaking, we're looking for dollar moves on the chart, guys. So I know it's tough to see how this is lucrative, but if you haven't traded options before, a dollar move equates to a nice percentage gain. A $2 move, really nice percentage gain. Every dollar that you move, and our options traders in chat, please correct me if I'm wrong, but there's the Greeks on options, and I believe that delta, well, I'm not sure here on going down, but delta going up, if you're going up and you're buying calls, then delta would work in your favor. So every dollar move, delta is what you're accumulating per dollar move per share. But again, something for later on, we'll get into that. But right now, what we're looking at is simply directional calls and puts. So the fact that Tesla failed this 282 level told me, hey, this is confirmation. We failed this key level. Now I can take buy a put or buy multiple puts here. So for me right now, I'm just experimenting with one put and one call at a time. Afterwards, I'll get a little bit more aggressive once I become more confident. So if you guys are just starting out, I recommend starting in a simulator first to really get the feel for it. But after you get the feel for it, maybe one contract at a time or whatever you feel comfortable with. But if we bought one contract here and we sold it here, this move here is 280 down to 277. This candle alone, after this confirmation, this candle alone was $3 on that move. So once we failed our key level and closed below, confirming that this is no longer holding, we made that sharp move. This candle is all I'm looking to scalp. So I'm only looking to scalp the very first candle following that. So generally that move is going to either happen or it's not. I'm looking for this move to happen fast within minutes, and I'm going to scalp from here to here, and I'm just going to get out. So as soon as I start seeing it slow down a little bit and start to get some recovery, that's it for me. I'm going to bail on the trade, or I may just bail on it as soon as I start to see some green. Now, again, I'm not as concerned with the percentage gain I'm making here. This is just, again, scalping. I want to see consistency. I'm not as concerned with getting 30%, 50%, 100%. I'm not as concerned with that as I am being concerned with consistency. So I want to make sure that these trades are very consistent. So I'm trying to hone in these levels. That way we can directional buy calls and directional buy puts. So if I think it's going down, I'm going to buy puts. If I think it's going up, I'm going to buy calls. Now, of course, I'm not going off opinion. I'm a technical trader, as you guys know, so I'm using technical levels to confirm my trends. We can see here that we had Tesla fail this level all the way up here. This up here would be an anticipation trade. So I wouldn't be able to take that trade because it came up to a resistance, yes, but it rejected that level and came back down. This is not confirmation for me. So even though this is pretty enticing to me, I probably won't be taking these type of trades. This is confirmation to me. This is confirmation and a fail. So depending on the setup leading into it, this was obviously pretty choppy. I think this is when we had that Fed news and decision the other day. So as we can see, it was pretty choppy at that level. The whole market was like this as well. So the whole market conditions will affect this. But simply put, this failed this key level at 308. So if I took this trade here at 306, which is $2 a little far apart, again, 15-minute chart, just this candle here went from 306 to then 302. That is a $4 move on this candle. That is what I'm trying to scalp. That's what I want. Then we confirm this next level, 303. And then this next candle, what did it do? Came down further. And it started here at 302, ended here at 300. Now, I may not catch that whole $2 move. I may not catch a whole $4 move, $6 move. That's okay. I'm not looking to catch a certain number on the move. I'm not looking for $1 or $2, $3. That's not what I'm looking for. What I'm looking for is a key level to either break down or break above to then hold that level and make a quick run. So quick scalps here. I'm not looking to hold these stocks at all. These are quick scalps on options. I'm going to be in and out very, very fast. Here's a great example here. This is a good example too, because you can see all these little green indicators here saying, hey, this is oversold. And it did get a little bounce here. So anyone who traded that anticipation trade here, that's awesome. That's great. But again, I'm not looking for the anticipation trades. Let me turn that off there. So that was a good example of the RSI becoming oversold even to here and not getting a bounce. So that was an RSI fail. So I'm still back testing that as well. But again, that's for another video. But we failed this level. We had a key level here at 293. We failed that level and closed below here at 293.03. This is a great one, depending on the option chain. This is a great entry here because it was so tight and close to our key level. Now, it depends on the option chain as well, which we'll get into in a moment. But so enter here saying, well, hey, we just failed this key level. We closed below. So now I can use this as my stop. We start to close back above or come back above. Then that's it. I'm going to bail on my trade. Well, we didn't. We made a sharp move within the next candle down to 291. So this is 15-minute candles. So of course I wouldn't be in for the full 15 minutes, but 293 to down to 291. So I'm using 15-minute candles and major key levels used from the monthly chart and the weekly chart to find these key levels. And then I'm using these 15-minute charts basically to confirm my trend. So it's confirming that, yes, we're under this level, we're bearish till here. Okay, we closed under this level, we're bearish till here. So really, I'm watching price action at each one of these levels, seeing what happens. Again, over here, here's a fail. So this one is a fail, but it also wasn't at the same time, right? So this closed below that level right there at 288. And then this candle was this hammer candle here, which showed rejection of lower lows and gave itself a little oomph back up to here. But this candle is a 15-minute candle. I'm trying to scalp this move very, very fast and very consistently. So this move right here, if I got in at 288, it went down to 285. That's almost a $3 move there. So a $3 move. Again, I'm not looking for $3. I'm not looking for a certain dollar amount. What I'm doing is directional calls and directional puts. If we close below a key level, that's where I go short, which means I'm buying puts and I'm scalping within seconds or minutes of my trade. I just want to get consistent trades on those key levels. So I believe that these key levels hold weight. As we can see over here, it did. So the fail of that key level gave a nice little pop, and that's what I'm trying to capitalize on right there. I'm not worried about the bulk of this move. If I were trading that, it would be a different story. I'm not worried about that as much. Now, of course, I am worried about the total sentiment of the direction. And we determined that because it failed this key level, that the direction is headed to this other key level. And we have this shade point here, which is a minor level. As we can see, we failed this level. This is all aftermarket and pre-market, so I'm not as concerned with that. And that leads us to our recent day on Tesla, which we just went over. And again, this 15-minute candle drop is a little too sharp and too far away from this level for me to look at this as my A+ setup. Although, with that said, we can see that if you got in here at the bottom of this candle, it still made a move from 277 down to 274, almost a $3 move there on Tesla, following confirmation of that level. Now, again, now the fact that we have this in the middle of the road here, how do I go about trading this? And I'm still back testing different ideas, but other key levels could be important here. We have pre-market highs are very important. So if we go over here, this pre-market high maybe over here would be very important. If we marked a level there, maybe I could mark a level here and do turn off the magnet to Alt-J, and this would be the previous pre-market high, and I would maybe change the color to it, right? So I know that that is my pre-market high. So if we come up above that, that's a key level as well. So you can find other levels in between here to possibly trade off of. But what I'm using is the major levels. Let me get that off of there because again, that's the pre-market. I'm using the major levels here on our chart to determine the major trend, and then I'm looking for opportunities. So the fact that we failed here, I'm looking for opportunities to possibly go short or buy puts. And we got that opportunity over here. We got that one here. Multiple opportunities on Tesla. And again, Tesla is a great name to keep an eye on because it has a lot of range and it's very liquid. Now, with that said, it can be risky because Tesla can move. It can move. That range can also bite you in the butt. So if you've got Tesla that has a range from what is this range here? So we went from all the way here down to here. That range is a $11, $12 range. So if anyone were to hold this, if you were to buy along, calls, and you held it thinking, oh, well, it's going to get back up. Well, it may very well do that, and that's fine. But that's not what I'm trying to do here, because then you'd be down on your trade here by a decent amount and continuing to fade off. So that's definitely not what I'm looking to do there. So hopefully that makes sense on the chart here. Now I'm going to pull up the option chain, because the option chain is very, I think, probably the most confusing part of option trading in general. So let me go ahead and pull this up. Let me do so. So right now I'm just pulling up, this is Webull, just option chain on Webull here. Let's see. Go over to options. Okay. So if you don't have this on here, then you just hit the little icon in the corner or the plus, and you go ahead and start adding these tabs. You can add them all different ways. Just give me 1 second, guys. All right. Sorry about that. I have the window open. Now we have, this is the option chain. Hopefully everyone can see that. Let me get this chart out of the way for a moment. So can everyone see the option chain here? It looks like a mess. Let me close it up. Let me get these closed up, and we'll look at it from here. So this is the option chain. This is the basic option chain. We're going to go over it. I'm going to go over the basics, and we're going to keep this very, very simple. I don't want to make this complicated for anyone. So what we're looking at here is the option chain for Tesla. Okay, so if we go up here, type in Tesla, TSLA, we're now looking at the option chain here. Okay, so and these numbers will change, upon market open next week. So we'll see. But these are the 6-day strikes. But again, not worried about this. We're going to click this first one. This is how I do it. Okay. So usually I'm trading the same week expiration. So we can see the expiration here on the side, 6-day, 13-day, 20-day, all that. So don't get too confused about that. I'm either trading the same day expiration or I'm trading the same week expiration. Okay. So I'm just going to click this one here. This is our first option. This is 6 days out. So this is the weekly expiration. Okay. So I'm going to go ahead and click that. And then we can see we have a few options here. Now, if you click this number here, and again, this is on Webull, it's going to be different for all different platforms. But if you click on this, let me see. I can barely see this. I'm not sure why, but if you click all there, let's see. Go back to 6. But if you click all, you'll see a mess of lines here, right? So I'm going to click 6, go back to 6, keep on that. But if you click that there, it should have things. I don't know why it's cutting it off on my screen. But not too worried about that right now. Let's see if I can separate this. Give me 1 sec, guys. Let me see if I can do something with this, because it's kind of cutting it off for some reason. All right. Okay, I see what it's doing. All right. Forget that. Can't do it. Anyway, all right. So let's keep it simple. Option chain. We're looking at the option chain, right? So we pull up the option chain. By doing that, you just go to this little, where's the widget? Here's the widget. Go to, let's see, options. So is that it there? I believe that's it. Yeah, I believe that's it. So anyway, we're going to pull up the option chain. I might have that incorrect though. Let me see. I don't know. I'll do a video on how I have my layout because I have a different layout as well. So we'll go over that here soon. But anyway, the options chain here, we have Tesla. Okay, so what we're looking at here is the 276 calls. Okay, so I have calls, puts. These are puts. These are calls. Calls are going up. Puts are going down. You can set this up so you have both. You can hit both there and you'll have them both. But we're going to keep it simple right now. I have it clicked on calls. So calls mean I think it's going up. So if I were to be buying a call here, what I would be doing is looking at this spread. So this here's the spread. You have the bid, you have the ask. This is the spread in between. Again, this is not live right now. So of course, if it was live, this would be moving and fluctuating and all that. So you have the last here, which is of course the price in between the two, but you have the bid and the ask. For me, to get in fast, I'm typically buying either market orders or just buying the ask. So as long as this spread isn't too wide, and right now we can see that there's 870 on the ask, 850 on the bid. So that's a 20-cent spread. That's a little wide right now. But again, during market hours, that will tighten up. So looking at these calls, this one would be, let's see, this would be out of the money. This would be out of the money here. And the reason I know that quickly, of course, you can look at the price itself, but it's out of the money because it's cheaper. So that's how I look at it. It's extremely simple. I could be wrong. Jeannie, anyone, if I'm wrong, let me know. But when it's cheaper like that, when I'm looking at calls and it's a little bit cheaper, it's out of the money. So typically I'm trying to buy at the money. So it depends on what the price is. So Tesla, 276. So let's pull Tesla's chart up real quick. So Tesla 276, we can see the price is right now at 275. Okay, so the price is at 275, right? So 276.67 would be the out of the money strike. So out of the money is generally going to be a little bit cheaper in premium. So you can see here, these are the premiums. And so this is what we're going to pay. So we're not paying, let's see, whatever Tesla's price is, $275. We're paying this here. So on this one, of course, this example on Tesla, it's going to sound probably more expensive than most, but what we're doing is purchasing this contract at this ask or bid price. So I don't focus on this as much. I'm going to just quickly go over this, but we're going to go back to the chart in a minute. I don't focus on this. What I'm focused on is the key levels on the chart. So I just want to get in my trade fast. So that means I'm buying at the money. So 275 is in the money. If it was right at 275, it may be at the money, but right now it's not. So it's just in the money. But 276 is just out of the money. So for me, I'm going to go ahead and click this. So I'm going to click that there, which it's not working for some reason. It might be because it's market hours. Give me 1 second, guys. Go to my account, see if I can fix this. Yeah, give me 1 minute, guys. Let's see. So customize, go to my account here. All right. So this is how I have mine set up, okay? So this is how I have mine typically set up on my account here. So what you'll see here, and this is on Webull. I'm using TradeStation as well, but I'm kind of messing with Webull a little bit more lately. But so what I have here is what you're going to see is this are the calls. These are the puts, okay? So I have puts down here. I have calls up here, so I can see both of them. And we're going to see that, again, if I'm trying to buy here, I have my active trader here. So buy the bid, buy the ask. Buy the bid, buy the ask. So this is going to correlate with this one. So this is linked, as you can see, 2 and 2. This is linked with this one. So when I click on, say, this one here, it's going to pull it up over here. If I click on this one, it's going to pull it up. So if you click on the percentage, it's going to pull it up on the right-hand side. And right now, you can't click on anything. I'm not exactly sure why or what's going on. But what I would typically do is I would go over here. I would click one I want to buy. So if I'm trying to get in fast, out of the money. So 275, I want to hurry up and get in, or where it's at now, 275.75. If I want to get in quickly, I would go ahead and buy this. Now, this is a little far apart on the strike. Ideally, I'd like to keep it close. But again, it's probably becoming a little confusing. But this looks like a mess, okay? It looks like a mess. I don't care about this. I'm not concerned with this. I'm concerned with the chart itself, okay? So I'm not concerned with the options chain. I use the options chain to get in and out of my trades. I'm concerned with the chart. So I'm using the key levels here. So this I feel like is a fail. I want to go short. So how do I do that? I come over here, I go to my puts, which is to buy puts going short or go short on the stock. So I'm looking to buy puts. So I would buy maybe the 275 or the 267 or 276.67 strike here. So to do that, I would click on that there. It would pull it up over here. I go ahead and say buy the ask or buy the bid, and then I'll get filled accordingly. Now you can adjust, of course, the number of contracts you want to have on it and all that. This is just set up for one. This is being all wonky for me for some reason, but so that's how I do that. So if I think that if I pull up the chart itself and I say, hey, you know, this one's going down, then I'm going to buy puts. If I feel like it's going down, I'm buying puts. Okay, so very simple here, even though it looks like a mess. So again, I'm not concerned with all of this other information that we have on here, and I'm not sure why this isn't allowing me to do anything here. I'll do a live video when the market is running too, so we can kind of mess around with some of this. But for some reason, I'm not able to change this. But I want to keep it very simple. Don't want to make it confusing. Hopefully that makes a little bit of sense. Again, if I think it's going down, I'm buying puts. If I think it's going up, I'm buying calls. Let's get the chart back up here to go over another example. So Tesla, let's check out SPY. So same thing with SPY, right? So SPY, very liquid, can trade this one. We failed. This is the pretty much the same setup, guys, as we saw the other day. This is that Fed. This is when the Fed stuff came out the other day. We had that little trickle of the day. Same thing as Tesla, if you guys remember. We failed this key level. Then we pop back up. So this move, this right here, is not what I'm looking to take. This is too rapid for me. This is not setting up properly. Now, this move here is, this close below, that would have been a beautiful entry. And of course, it just dropped down immediately. But then this one here, of course, failed a couple levels as well. So then we had another fail. So we had multiple levels that were failing here and multiple entries there to possibly scalp on Tesla. If we look over here on the previous day on Tesla, this here would be an anticipation trade. So not really the setup I'm looking to take. Same with this one here, anticipation trade. But we could find smaller time frame levels, which I am working on. I'm working on setting up levels on the indicator here. So I'll be getting this out to our team soon. But we have the pre-market high, yesterday's low. So these are key levels in between as well. So maybe it responds off of these levels. So I'm back testing that. So once I get that all back tested, we'll figure that out as well. And whatever I learn, I'll share with the group, of course. So does that make sense, guys? I know it seems complicated. Let me see. Let me see if I can pull up the option chain again. I think the option chain is by far the most complicated part to this. I'm not sure why it is so complicated, but it is. The option chain here is complicated. We're just looking at the first week or the weekly expiration or same day expiration. I'm looking at this as the price I'm going to be paying. So if I got in here at $785, I'm paying $785, which, you know, sounds like a lot to some, but it's not bad because you're the percentage gain on that is nice. If we went over to NVIDIA, you're looking at $385, so $385 roughly for that one there. The strike is 126, so that's where roughly where the price is. So let's see. Say AMD, maybe you're scalping AMD options. Same thing, pretty cheap. These are calls for it. If you bought puts, puts are going to be different prices, as you can see here. So, but yeah, so that's pretty much it, guys. I mean, that's basically the bulk of what I'm doing here. I'm very, very simply put, buying directional calls on these major cap levels. So we saw in our Discord, I posted some ideas this past week in our market thoughts. So I'm going to start taking some time and doing that, going over these market thoughts here each week. But these are what I was thinking was going to possibly happen throughout the day. And these are the key levels that I was looking at. So NVIDIA worked out really nice. We said that the previous low of 126.17, if it dropped below that, I was looking to possibly scalp a move further down. So if we started to break down 126, it was a possible scalp there. That's what I thought was a key level on NVIDIA. So if you pull up NVIDIA and you take a look at it from the other day here, I don't see my key levels on it for some reason, but let's just mark 126 here. So roughly this is 126, right around here, 126, around there. So that was the level there. So we failed that level. This was the other day, by the way. So that was mentioned a couple days ago. This is when we failed that level and we got a little move down further. It wasn't a huge move, but it was a nice scalp. This was that move the other day as well. I think this is the one I took actually on NVIDIA. Nice clean close below, came down. We got ourselves now a little anticipation here might be nice. So that's why I'm experimenting with different time frames. So maybe that level would have been nicer to scalp on a smaller time frame. So as we can see here on a 5-minute time frame, it closed below and gave us that scalp, but we can see it was also kind of choppy. So I'm trying to backtest these levels and really figure out what I like. Right now, for me, it's 15-minute charts, so some of them just don't set up the way I want them to. I use these major levels to determine which direction I believe it's going to be headed. And then I always have a few of these up at the same time. So if you guys notice here, I have a number of stocks with a mess of looking charts here, but I typically have SPY, Tesla, NVIDIA, AMD. I typically have these up. I have others as well. Microsoft, you know, different names that come up, but typically I'm trading Tesla predominantly, or I'm going to stick to Tesla. And then also NVIDIA, SPY, these are ones I'm going to stick to, kind of cycle through these depending on setups. So hopefully that makes sense. I think that's pretty much the bulk of what I wanted to go over. So again, very simply put, I think the options chain is confusing. I'm going to do a video on my option chain, and I'm going to do a live trade video. I'll do a live trade, taking an option trade, on exactly how I scalp that move, and that way I'll kind of give a better idea of that. But it's really simple, guys. I'm using large cap levels to get big moves. And just for anyone who is not aware of that, you know, you can get 100% move on Tesla, and you know, in a day's time, which you will never see 100% move on the stock itself. But in options language, you can get 100% move possibly in Tesla. The gains that you can get on those trades are pretty large. But the thing is that what you're doing is you're going into it with a set loss. So if you buy one contract for 100, like the other day, I bought one contract of Apple for $177, right? I bought it for $177. It cost me to buy this contract. It was $1.77 per share, and you get 100 shares per contract. And again, we'll get into all that and the Greeks and all that in another video, but or another session. But we have. I bought Apple at $1.77. It went to $6.08. It was over, I believe, let me see here in my notes. It was a $422 profit on a $177 entry. So I paid $177 for the entry. I made $400 back, over $400 back. So it was huge, and that was over 200% on that one. So that was on Apple. So the gains that you can make on these options are absolutely huge. But now, if it went against me, I can always take a stop. I can always stop out. So it's just like day trading our low floats. If the trade goes against me, say I'm wrong, which there is going to be plenty of cases where I am wrong, I'm just going to get out. I'm going to bail on the trade. You can always get back in the trade later. So I'm going to bail on the trade. So simply buying calls if it goes up, buying puts if it goes down. I'm using my key levels and using confirmation strategy to do that. So let me see if I can pull this up again. So just want to make sure that this is very important here. So again, keynotes here, strictly trading from the stock chart. I am trading from the stock chart. I'm not trading off of level 2. I'm not trading off of the option chart. A lot of traders will use the option chart, and I'm not saying, again, this is not the only way to do things. This is just the way I'm doing things. So I'm using the stock chart itself to make my decisions. I'm scalping in and out of my trades within minutes or less. I don't want to hold these. I'm using confirmation strategy to execute my trades. So if it doesn't set up right, if it has red flags, then I may not take the trade. I'm cutting losers fast. You can put stop losses on options. You can put a trailing stop. There's all different ways that you can protect yourself in this trade. But what's most important is you're mitigating risk altogether, because if you go into it and you're just buying puts and buying calls, if the trade goes against you, the worst case scenario is you lose what you put in. But that 9 times out of 10 is not going to be the case. You're usually going to cut that position before that happens. Now, again, I'm trying to get in and out within minutes. I'm not holding these stocks overnight. I'm not holding these stocks for hours at a time. I'm not holding these stocks for the full week. Okay, so I'm trading weekly expiration, but I'm in and out within minutes. I prefer to buy at the money or just out of the money options. I'm going to prefer, if it'd be ideal if, say, Tesla was at like I said, for instance, 200, and the at the money option was also at 200. That's ideal, because then it's going to move in my direction a lot faster. But I do want to get in the stock or the option very fast, and I want to get out fast if I think that key level is being broken. I think a move is about to happen, and in which case I'll buy just out of the money as well. I'm sticking to liquid names with high option volume. So I'm going to be recycling through the same names each week. And that's what makes it cool too. There's a few benefits to this, guys. The benefits to it is that we're using the same strategy here. We're using confirmation, but we're using it on usually wider time frames. So that means we have a lot more time to make our decisions. So in our low float land, we have a minute. It's a minute decision. Every minute we're making a decision. But in our large cap names, we can maybe be using a 2-minute chart, a 3-minute chart, a 5-minute chart, 15-minute chart, which I use, a 30-minute chart. So with that being said, you have more time to then execute and make your decision on those trades. So what's great about that is you have that availability to make a decision in real time without it being too overwhelming. So sometimes it can become, with the low floats, you can get some high anxiety. It can become a little rapid and really fast and hard to keep up with. Well, in our large cap, it's not going to be so much that as much. It's going to be more so gradual moves. We're looking for a breakdown of a key level. If it goes against us, we just cut that one. We just get right out of it. So I'm going to be cycling through the same names: Tesla, SPY, Apple, NVIDIA. There's other names as well that will come up, but really going to be recycling through these same names fairly often. But that's pretty much it, guys. That's the bulk of it. So I'm going to shut down the scanners, or excuse me, I'm going to shut down the stream here. So I appreciate everyone joining us this morning. We're going to go ahead and shut this down. If anyone has questions, we'll start going ahead and taking questions in chat. And again, I'm not the best options trader here in chat. We have far better options traders than me. But again, I'm just approaching this as simple calls and puts. I am not looking for a big move. I'm not looking for an overnight position. I'm not looking for any of that, really. I'm just buying, typically market orders, or I'm buying the ask. So I'm buying market orders to get in fast, or buying the ask to get in fast, and I'm typically selling on the bid or selling market orders to get back out. So typically market orders to get right back out of that trade. So I want to get in fast. I want to get out fast. I'm trading off of chart levels. So chart levels are very important. So I'm going to go ahead and shut this down, guys. I appreciate you joining with me. We'll go ahead and start answering questions in chat now.